Good morning. Welcome to Market Day Report. I'm Tony St. James. Overnight trade action as we're preparing for a very busy day in the markets because we get two reports from USDA, big ones. It's the annual acreage report, and we get a quarterly grain stocks report, and so some pre-positioning ahead of that report in overnight session. Let's go to the corn market, see how things have been shaping up. One other thing we throw into today, first notice day for our July grain futures. Might explain why that corn contract overnight, 414.5, up 3/4 of a penny. December, let's keep an eye on that throughout the day, 433.25, trading a half penny lower. Soybeans overnight session moving higher. July 11.53 3/4, penny and a half higher, and the November at 11.10, trading towards the top end of the range, up 5.25 cents. Wheat market coming off of a pretty impressive export sales report yesterday. July at 563.75, up 4 on the Chicago hard red winter wheat. Up a penny and a half at 593.5, and spring wheat, we trade that in Minneapolis. The July down 3/4 of a penny at 610, but really watching September, December, March, all of those are moving higher. And in overnight trade, cotton has been on both sides of the trade, but mainly lower because the October just not much action there. 74.50, it's up 59, but D's, again, the new crop at 74.49, down 9. Brian Hoops is with Midwest Market Solutions. And Brian, I guess I used this analogy earlier. Did you ride in the rodeo? And if so, you think you can hang on for 8 seconds starting at 11?
Yeah, good morning, Tony. Going to be kind of a wild ride, I think, today. You know, we've had very volatile moves historically in the corn and soybean markets in reaction to today's report. So you do have quarterly stocks numbers that come out, but I think everyone is really looking towards acres, especially the American farmer who's looking for a reprieve in these corn and soybean prices that have really just free fallen here during the month of June, looking for something to spark a turnaround, to get that fund selling to turn into fund buying and give us some higher prices. So his history, anyway, tells us that the corn market, whatever direction we end today, whether it's higher or lower, 13 of the last 14 years, we followed through with that the following session as well. So we'd look for Monday to be a continuation of whatever direction we close today. And that, average moves is about 14 cents on the upside for corn, downward moves about 19 cents over the last 14 years or so. So we have some fairly significant moves coming up. And same thing for soybeans. It's going to be a very volatile day, it looks like. We're going to have some big moves. And again, whatever direction that we close today should give us direction on Monday to begin the following week. So, yes, you have these reports. You have the deliveries overnight. They're fairly heavy for soybean oil and for wheat and for corn. And so I think we absorbed that overnight. Probably not going to trade that too much during the session here today. It's going to be mostly focused on those stocks and those planted acres.
All right. Brian Hoops is with Midwest Market Solutions. Hang on. We're coming back to talk livestock in a moment. No trade and overnight action in livestock, but we'll get the day set for you as Market Day Report continues after this. Welcome back to Market Day Report. It's a big Friday with reports coming out. We did get a report yesterday on hogs and pigs. We'll get to that in just a moment. Let's look at how livestock markets closed the day on Thursday, starting with the live cattle trade. As we were mixed, that June contract, $1.25 higher at 194.17, but off on the deferreds, including the most active August, down 30 cents, 186.45. Now for the feeder cattle, we saw a movement lower. We did start higher, but ended the session with August at 260.65 a hundredweight, down $1.12. All the deferreds were at least $1 lower as well. Now we did get a pretty good number from USDA's a weekly export sales report on hogs. The fact that there's some demand overseas, but it didn't have enough to push the hog market higher, in part because we were waiting for a hogs and pigs report. But July hogs, 89.45, down 45. August, 88.10, down 87.5. Speaking of that hogs and pigs report, what we saw yesterday was a slight increase in the inventory. Breeding inventory down 3 in the market, hog inventory up 2, that out from USDA. Brian Hoops is with Midwest Market Solutions. And Brian, as we start trying to digest what's happening in the proteins, in the livestock markets, what are you watching?
Yeah, we're still waiting for some more cash cattle trade to develop. We've had just this scattering of trade in the Southern Plains and virtually nothing on a dress basis. There's been a handful here and there, some trade on the Fed cattle exchange, but the big picture, we're still waiting for more trade to develop, and it looks like it's going to be at that higher money. The cutout values are maybe starting to struggle a little bit. Now, next week we have a 4th of July holiday, so it'll be holiday short and kill week. That's going to help out those boxes because we'll have less slaughter. So at least through next week, we should keep these cutout values. After that, that's when you start to become concerned from a demand standpoint. We're past the Father's Day grilling time frame. We're past 4th of July holiday, and we're left with kind of Labor Day in a couple months. So there's a long stretch there where demand could soften a little bit. And if those cutout values soften, that's where we get concerned about the complex, especially at these higher price levels. So probably a good time to be looking at put call strategies, getting something in place. The hog market this morning, it probably dialed in a little bit of bearishness over the last several weeks, especially yesterday after that rally failed into the closing bell. The report isn't real widely followed, so we have a little bit of a bearish reaction to it this morning. But again, I think a lot of it was factored in, kept for breeding, longer term friendly number if we can sustain those type of numbers into the next report.
And speaking of reports and widely followed, there was a cattle report that we'd be getting pretty close to this time of the year that we won't get. With about 30 seconds left, will that have any impact?
Absolutely, yeah. I think it's a very much a disappointment that we don't have that report, which should be coming out. I think today is when we normally have it, that semi-annual inventory report, and it just gives us a great idea of how many calves that we have in this report. That we're not going to have that idea, so we're left to guess off of these numbers, and so it's a disappointment that we don't have these reports. I'm sure we'll adjust to it, but again, it's just one piece of information that the government is not giving us that we badly need to have.
Well, maybe that's an entrepreneurial idea for Brian Hoops and Midwest Market Solutions. You can drive around just counting cattle. There you go.
There you go.
Well, thanks again, Brian Hoops, Midwest Market Solutions, on today's Market Day report. Again, a very, very big day in the markets.
Yeah.